It should have a massive premium to the industry, and there's two reasons. The first is its iconic nature, and there's really scarcity value of these types of companies that are liquid enough to invest in and have this kind of runway for growth. And the second reason that's really overlooked by investors is 1/3 of their portfolio is asset light. They don't actually own what they build internationally. They just support those businesses.
So actually, they have a model right now that a lot of other fast food, quick serve restaurants have been trying to embrace, which is, right, to offload sort of that burden by franchising. They've already sort of got that system in place. What are you looking for in this quarter tonight after the bell?
We're looking for flow through. So we're looking for a flat comp, but we don't take percentages to the bank. We take dollars. And this is a massive AUV story with massive profitability and flow through. So we're looking for the dollar profitability, and we're looking for that to be up year over year.
Nicole, what do you make of Beyond Meat's trading today? I mean, this is one of the biggest openings we've seen in the last decade, basically.
I think options like this are very exciting for consumers. I always get asked the question about eating healthy, and I think a lot of the time eating healthy happens at home. But it's interesting to see, demand like that because it shows us what consumers want. We see a lot of those things in our surveys from time to time. But when we bring that back to Shake Shack, I would say that meat, meat and potatoes, and certainly burgers and fries are the staple of our economy. And when consumers want that, they want the iconic, juicy Shake Shack burger.
Shake Shack, though, doesn't it have a portobello burger or something like that, Nicole? I mean, can you see just by the demand for Beyond Meat, the consumer demand for this sort of product, that this should be a menu item on a menu like a Shake Shack?
Absolutely. Even Burger King is testing something similar, and if they're doing it, then everybody else should. And the option is important to forego the veto vote. Salads definitely work, and even shakes work in that regard. But those are two of the things that are actually going to help Shake Shack in terms of menu innovation, number one, and then also doing delivery this year as well, number two.
What's your second pick after Shake Shack, Nicole? I'm curious.
Second pick, Chipotle, and after that, Chipotle, and after that, Chipotle.
Wow. So you really like Chipotle. So you like these the stocks that trade at a high premium to their peers or their so-called peers at this point. The market can support that sort of thing.
Well, absolutely. We're in this interesting but crazy point in the restaurant cycle. It's all about consolidation. And the massive amount of M&A has left us with 30% fewer stocks. So there's not as many investable options, and that's where we get part of the valuation support from. When it comes to Chipotle, it's also a recovery story and a contrarian story rolled into one, which the part that absolutely fascinates me about Chipotle is despite the run the stock has had, 63% of the sell-side ratings are still hold and sell.
And it's up 68% over the past year. By the way, Nicole, why didn't McDonald's or Burger King use its R&D budgets to come out with something like Beyond Meat or the Impossible Burger?
I think that they have, core customer mid-America, really does want the cheeseburger and fries when they go out to eat. And a lot of that healthy eating is happening at home. Now, that might change, but the markets admittedly are just growing very, very fast, but they're really small dollar amounts. And if you think about McDonald's, it probably makes more sense for them to make the technology investment that they made and have suggestive selling and sell more of the current product to the huge customer base that they do have.